Monday, February 1st, 2021, Maneco 64, home of alternative economics and contrarian views. So it does look like the bullion banks are on their back foot. Are the bullion banks running for the hills? And what does that mean? Well, for almost 20 years now, I've been following gold and silver. Many of you know that I worked as a futures and options broker in the city, not in the precious metals market. I was a bond guy, and my clients were not retail investors. They were institutional investors. And it's one of the ideas I had when I started making my videos, that I would let the public know what I know and what I used to talk to my institutional or professional clients about. That's what I would try to bring to the table, and also try to expose the fraudulent nature of gold and silver market, the bullion market. And it's been a long road, and I'm still very skeptical about getting too excited, because we've had a lot of disappointments in the past. On the live stream last night, I had Bill Murphy on. Bill Murphy has been looking at this since 1999, and I have to give him credit. He keeps going at it, because he's right. The problem with the bullion market has been that it's been manipulated by governments, and the banks, we all know, run the government, right? I don't have to tell you that now. And I think with the Wall Street Bets story, people are starting to realize that everything's rigged, and that the banks, Wall Street, and the governments work together, that they collude. And it's the same thing for the city of London. It's the same thing for Frankfurt and Paris, all over the Western world. But with that, let's look at where the markets are this morning. I have to admit, last night when gold and silver opened, I didn't get a very good feeling, because silver couldn't even get above 29. Gold was almost trading back to unchanged for since the Friday close. But I've gotten up this morning. It's 8:15 a.m. London, and I'm actually quite encouraged, because as I speak right now, silver has just broken through the high from last year. The high, we talk about 30, and I have spoken about 30, but it was actually around 29.80. So we are breaking that high. You can see this chart here. I've shown it a few times, this weekly chart. This is a really good technical formation. We've got like a pennant, and we're breaking out now. It's looking very good. I've spoken about how the target on this would be around 50. Difficult to say the amount of time, but it could be a few weeks, or who knows, things could start moving really quickly if the bullion banks, and by the bullion banks I mean the major too big to fail, especially like JP Morgan, Goldman Sachs, Barclays, HSBC, Deutsche Bank, they could be taken out on a stretcher. That's an old saying by Bill Murphy of GATA. I think years ago, had a picture of this guy being taken off a field, like a football, I don't know, or a soccer field, and he was being taken out on a stretcher. And I think he photoshopped it with JP Morgan on it. And even if they don't get taken out on a stretcher, I think they need to cover. The bullion banks have a huge short position in gold, especially. I think it goes into like 38 billion or something like that. Some people have spoken about how the bullion banks, their shorting is for miners, but I don't think that's true, because if you look at the commitment of traders, the producers are in the different category than the swaps, which are the bullion banks. So I'm not sure. I think they have they're gonna have a tough time covering. What that means, as we've seen with GameStop, when you cover, you have to buy, and then it just snowballs. And I think I don't want to jump the gun. I'm very when it comes to gold and silver, I try to remain really calm, not to get too excited. But it could be something that would make GameStop look like a picnic, as I said with Bill Murphy last night. And why is that? Well, because we saw that GameStop, the amount of shorts they had was 140% of the float of stock in circulation. But with gold and silver, it goes into the hundreds. They've rehypothecated it many times. And how do they do that? Isn't it illegal? Well, not in London, in the city of London. And that's why a lot of the bullion banks and the LBMA is in London. They can lend out gold that they don't have many times over to their heart's desire. So yes, it's getting very interesting. As I speak here, we've just dropped from 30 to 29.70. What about gold? Well, gold looked like it was gonna go down last night on the open, and it did. It went down to 1843, so it was kind of like down on the day. But now, this morning, we just traded up to 1872. 1875 is the key resistance. That's the high. The last two highs have been around that level. So we know that the bullion banks are trying to defend that level. Silver, as I said, we just got up to 30. I think the high now is 30.15. It's coming back down though, but you need to really be patient with this. And as I said many times, you need to hold on to your physical gold and silver in the bull market. It gets really wild. We can see large fluctuations of the price, and I think it's going to begin to do that. And as I've said many times before, that's why I also try to tell people not to worry too much about price. Just try to get the physical if you can. And I think it's going to be very hard to get the physical now. Not that you won't be able to get physical gold or silver, but the prices have been suppressed for that long that when people or authorities or governments, and this is the government doing this with the banks for decades, when they suppress the price of anything, it creates shortage. Richard Nixon tried to impose rent controls or price controls. I think New York City imposed rent controls. What that creates is shortage because the providers of the service or the manufacturers of the goods of which the prices are controlled, it doesn't pay for them to produce or that good or provide that service. So they stop producing or they stop providing the service. So the less supply there is, and you know, the higher the price will go if the demand stays constant or even increases. And this has been the story for gold and silver for the last few decades. So who knows where gold and silver could go? I mean, cliff high of half past human, and I've been following cliff high since like 2007 or 8. His reports, his Alta reports. And I used to cover his Alta reports or do a summary in my videos up until 2016, 2017. He stopped doing his Alta reports. Basically, he does neuro-linguistic analysis of the mood and the language of the internet. And he doesn't predict or forecast things. He just tells you what he's seeing. And he's got very short-term, medium-term, and long-term forecast. And yeah, you can go to my channel under videos and type Cliff High or Alta Report. And he was saying this back in 2016-17 that he saw 600 silver price in the language, but that it would have to be connected to societal breakdown, hyperinflation, and all these things. So it looks like we're getting very close to that kind of scenario. I'm not saying we're going to have $600 silver in the next few weeks, but I think we're in the beginning of something. Of course, the key level for silver is going to be 50, and that's where the big resistance is. It was the high in 1980. It was the high in 2011. So it's getting very interesting. But as I said, you need to try to get, if you still can, and I think you will, but it's going to be harder. I think the premiums are going to be higher as well, and you're going to have to wait for the delivery. Get the real thing. I'm going to try to get some this week as well, maybe some gold as well. And that's why I designed the smug last year here. Only physical gold and silver will slay the bullion banks. So I guess the thing with GameStop and the Wall Street bets is that it showed that the little guy can beat the big guy. And I've been saying that it won't take much to defeat the bullion banks if millions of people buy a few ounces here and there, and then you add on a few billionaires who buy some tons. I think it's going to be hard for them to keep this thing under wraps. What about the stock markets this morning? Well, the Dow futures up 0.75%. It's back up above 30,000. The S&P is up almost 1%. And the NASDAQ as well is up almost 1%. The FTSE is down 0.75%. The currencies, we got sterling up a third at 137.46, third of a percent. The euro is down slightly at 121.24. Dollars unchanged versus the yen. And the dollar's up slightly versus the yuan at 6.46. It's weird because gold and silver are up, and the dollar's pretty much unchanged. So this is a good sign, because it means that precious metals are moving up against all fiat currencies. High-grade copper up 0.5% at 356.90, and WTI crude is up 1% at 52.60. And to finish off as usual, the 10-year yield is at 108. That's down about 1 basis point. So I'm gonna be talking with Rafi Faber later on today from the Endgame Investor. So I will publish that video later on today. So you've got another video today, 2 videos. I try to just make one. It's like the law of supply and demand. I try not to just keep it limited, because sometimes if you do too much, it's not good, in my opinion. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, Hive, BitChute, DTube, Steemit, and Library. I wish you all a great day. Take care. Bye.